Zoom stock has taken the world by storm. It seems to rapidly have become the most popular chat stock. Those who got in early have made out like bandits. With a 52-week price range of 61 bucks all the way up to 478 bucks. Is the valuation still worth it? Let's take a look in today's video. So as you probably already know, Zoom has taken over the world and seems to rapidly have become the most popular video conferencing, chat, coordination, remote coordination tool, and more. And the stock price has grown at an equivalently rapid pace. After their IPO in 2019, there was a period where the stock price was pretty mellow, I would say, and then after the pandemic started, it was like off to the races big time. Check out the stock price showing the meteoric growth in the last 5 to 6 months. So before going into my thoughts and my evaluation on some of the numbers, whether or not I think it's a good recommendation for your portfolio right now at this price, I wanted to take a minute to look into the company. Who are they? What do they do? Because I learned a lot doing this analysis, and I'm sure there are people out there who just think of it as like Skype or something like that. So let's take a look at that first. So for me growing up, Skype and more recently FaceTime, sometimes Google Hangouts, have been kind of the primary means of doing video conferencing or video chatting with people, whether it's family or work/professional. Skype seems to always have been like the professional version. Maybe it's because it's for Microsoft, whereas FaceTime and Google Hangouts are more just kind of like for hanging out with your buddies kind of thing. I'm not really sure how that's happened, but one of the things I always wondered about with these companies and with these offerings was kind of like, why haven't they upgraded or changed anything in the last like many years? I've been using Skype for like 10 years now, and it like still sucks in a lot of ways, and it's still frustrating and like very high friction to use in a lot of ways, especially if I'm trying to have people call my American Skype number here in Japan. Speaking of Japan, apologies for the sounds if you're hearing a lot of banging going around in the background. There's a house being built literally like 10 feet from where I'm standing. That's life in Japan. If you want to learn more about that, I'm going to be starting a Japan-centric YouTube channel coming up here probably in the coming weeks. Anyways, back to Zoom. One of the really interesting things we've seen is that Zoom seemed to just kind of appear out of nowhere, and then every company, every school, every organization was like, hey, use Zoom. Here's the Zoom address. Come join our Zoom meeting. And one of the things that Zoom has done that really helps it to stand apart from a lot of its existing competitors is really, really easy setup, really low friction kind of experience. It's just kind of like download it, and you're in. Like, you can watch stuff, you can join a meeting. I joined, like, my first experience with Zoom the other day. My buddy was getting married in Osaka and I couldn't travel down for it, so I just like downloaded Zoom, logged in, and I could watch the whole wedding. I'm like, wow, that was pretty easy. I didn't have to like pay money or put in credit card information or anything like that. That's one of the really kind of strong points that they have, but they also do like really, really big video conferencing. So if I was doing like a seminar or a college course with like 500 people or 1,000 people, I could do that, and then I can also see all the people who are looking at me, but I'm the only one allowed to talk. Another cool offering that they have is kind of like a conference. Like, imagine you went to a conference with 300 people, and in between the main sessions, you would split up into smaller groups or seminars or things like that with maybe 5 or 10 or 50 people. You can do that, but still be in that same conference group. And this level of kind of like organization all online hasn't really existed yet in a way that's this easily accessible for the average Joe. There are also big competitors like Cisco WebEx, and more recently Microsoft Office and their Teams. I'll get more into some of the competition a little bit later here in a minute. Another really strong point, I think thanks in part to the really frictionless, the really easy and simple setup, is that customer satisfaction is really, really high with Zoom. We don't see a lot of people who are like, yeah, I tried it once and it sucked, I'm never using it again. I do know a lot of people who said that about things like Skype. Not really super familiar with Office yet, but it seems like one of the reasons Zoom's growth is so parabolic is because it's just so easy to set up. And I think that's going to be really key for them going forward in addressing this. Basically, it works out to be about $43 billion total addressable market, which is the TAM, which is like, hey, there's all of this stuff to be harvested. One company is taking a little bit, one company is taking a little bit. Zoom is trying to come in and take some, but this whole field is $43 billion worth. and I think it will be growing in coming years for obvious reasons. Should also mention that they do offer voice chat, normal just like typing chat. They're getting into phoning, phone lines, and stuff like that, which kind of steps them into the whole world of like actual telecommunications, replacing phones and stuff like that. And they are touching into content sharing and content collaboration as well, which is stuff you see kind of like with Slack or Microsoft Office, tools like that. One of the concerns I first had before I even really started looking into Zoom was that I was like, dude, it's just a chat service. I can use it for free. How are they gonna make money? What's the big deal? After I started to look into the details, I started to realize that a lot of my assumptions were like really wrong. One of the examples of ways that I was wrong was Zoom Phones, which is a newer service that they're starting to offer, which is basically saying, hey, you already love Zoom, you're already using Zoom for all these things, you might as well pay us 10 or 20 bucks a month to use Zoom Phones, which allows you to, it basically like takes the place of your current cell phone carrier and allows you to call internationally and things like that. And so I think it's legitimately capitalizing on their extremely huge user base already and starting to offer more higher profit products that will raise the bottom line for them. But at the same time, we're also seeing them be really aggressive, capitalizing on their basically no debt right now and using their cash and their free cash flow to be able to step out into more profitable markets. Zoom's original goal basically was to make the most frictionless video communication available. As I mentioned earlier, I think that's one of the big triggers for them growing so virally. So taking a look at their front page, here are a bunch of the things that they advertise that they're good at: meetings and chat, video webinars, conference rooms, phone systems, and marketplace, where you can get other integrations and bots that work with your already existing Zoom stuff. So all that being said, let's start to look at some of the numbers. We've seen meteoric, like actual mind-boggling, like my mind was literally boggled looking at some of these numbers. Even though they launched in early 2019, they've already pulled off a full year of GAAP profitability, which is a lot more than most tech companies can say. On top of that, we're seeing quarterly non-GAAP operating margins topping 40%. So most tech companies, typically, they'll need to be continually pouring money into R&D and or sales. Like we did some videos recently on like Salesforce or DDOG or even Box, who are constantly pouring money into R&D. And I think Zoom is doing that, but they're just so extremely profitable that they're already, like in their first year after being an IPO, they're already like very profitable, regardless of R&D spend. Earlier I mentioned like, dude, why doesn't Skype or why doesn't, FaceTime or something offer something similar to this? And I think the answer lies in basically Zoom's proprietary routing technology, which basically makes it really, really slick and smooth for all of these people to be communicating simultaneously on the cloud. And that's not just something that a company can just like, well, yeah, why didn't I think of that? Just make the best proprietary routing technology. Creating that is actually very hard. It's kind of a similar story to what we see with Google's search algorithm. People could say, dude, why don't you just make a better search algorithm? Like, you don't just like make it. It's like really, really, really hard to figure out the best ways to do that. Same with a restaurant and their special recipes, basically, simply put. So Zoom has this proprietary routing technology that is kind of their special sauce that makes these huge meetings so smooth and so effortless for so many people. And another really interesting impact that we're seeing of such a smooth experience is that 55% of their paid users started as free users. So a lot of companies, like we did a video on Dropbox recently, like there's so many free users, like everybody has a free Dropbox account, but getting them to switch up and start paying is like an extremely high hurdle. But with something as valuable and like life-changing as Zoom, a lot of people come in, try the free one, and they're like, yeah, totally, I'm gonna pay for this. Individuals and companies alike. Recently, I did a video on Slack that talked about one of the typical ways that Slack grows, and that way is very, very similar to Zoom, where there's somebody who kind of champions the brand, goes into their office and says, hey guys, I know we're used to doing it that way, but actually Zoom's way is like way better. I use it at home with my family, check it out, let's try it. And then soon enough, the whole company is adopting it and they love it and they're willing to pay, and then Zoom is growing as a result. In a stock analysis I did on a company called DDOG a couple weeks ago, I mentioned the land and expand model, which is basically going to companies with salespeople and saying, hey, we know you have this problem and this problem and this problem. We have a product that can solve your first problem. So let us show it to you and let us demo it for you and please check it out. Then they give it a shot and they're like, whoa, dude, this saves us so much time. This makes our life so much easier. Come on in. Here's our money. Take my money now, kind of thing. And then little by little, you know, Zoom can come in and say, they already have this relationship with them. They can come in and say, hey, you already have this product and you love it. We can solve these other problems too with our other offerings, you know, and then they can upsell them and become even more profitable. So land and expand is also a business model used by Zoom especially when aiming for bigger corporations. And one of the neat things about bigger corporations is that they're generally much higher margin as well. One of the things I've seen around myself is like schools and organizations and companies, a lot of cases say, hey, we're doing this meeting on Zoom only. You need to adopt Zoom, basically. And so a lot of people they don't even know about it. They're just being forced to know about it and learn it and figure out how to use it because it's grown so quickly among, you know, organizations and leadership and things like that. And that's like a really, really big kind of like intangible moat thing. You can't just say, you can't put a number or a value on that. But at the same time, you never really see that happening with Skype or Google Hangouts or things like that. That's a really special ingredient in Zoom's secret sauce, I think. Currently, we're at about $411 per share. We're filming this on September 16th with a market cap of about 116 billion. We're seeing PE ratios topping 520, along with an EPS of about 78 cents per share. Let's take a look at some of the figures for the most recently completed quarter to help us wrap our minds around some of the numbers and where they might be going towards in the future. Revenues are up 355% year over year to 664 million. Typically for software companies of this size, we see like a really disproportionate amount of their revenues and profits coming from really large companies, really large clients. But one of the interesting things we see with Zoom that's kind of different is that a really big portion of their revenue growth is also coming from smaller companies and individuals too. We saw the number of $100,000 plus per year clients grow 112% to 988 customers. In previous years, the amount of revenue coming from smaller clients or individuals was generally about 20% of the overall revenues. But in the recent quarterly report, they mentioned that going from 20, they've gone all the way up to 36% of revenues coming from smaller companies. I mentioned some of the ingredients going into the moat around Zoom, but I think it's also important to look at some of the other competition and the other companies who could be in or thinking about coming in to Zoom's market. I think the primary competition probably lies in programs like Skype for Business, Cisco WebEx, LogMeIn, and BlueJeans. Like I mentioned earlier, Google Hangouts and Slack kind of like have overlapping offerings, especially when it comes to like collaboration and file sharing and stuff like that. But they don't offer a lot of the kind of large video conference type things like some of these other services do. That being said, I still think, and I think the numbers go to prove me right, that Zoom is way easier to set up. It's way less friction to set up. It's just like boom, 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 done in like a minute. And it's not intimidating. You have to sign up, you know, credit card information or anything like that. And I think that's one of the big advantages they have over some of these other competitors. I think some of the other competitors can try and come in to mimic that. And I hope companies will continue to improve their offerings. Like I mentioned earlier, you know, Skype and stuff like that are just kind of like garbage from 10 years ago, it seems. But I think that's one thing that we need to be considering going into the future is that, you know, yeah, they're the man right now. They're a super awesome company that everybody has to and loves to use right now. But that could change relatively quickly. One of the really tricky things about evaluating a stock that's gone so high so quickly is that the expectations on it now are like really ridiculous. Basically, the last 2 quarters, the expectations for their earnings were here. And sometimes companies will come in and say, yeah, we beat that by 5 cents, bro. But they came in and they were just like, dude, we're like out of the camera. You can't even see how hard we owned the expectations. 2 quarters in a row. And usually when that happens, like what we saw on September 1st, the stock price jumps like $140 in one day. And so one of the really tricky things about evaluating a stock is figuring out those expectations that people have on it. And the expectations were here, they came in and hit a home run. Then the next quarter they came in and hit a home run again. And so the stock price loves to just go flying, and everybody on the internet, especially like, you know, younger retail investors are just like, oh my gosh, I have to have that for my portfolio. Let me get Zoom, 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 Zoom. Market price, I don't care, buy. And what ends up happening is that the price gets out of sync with actually how much value they're providing. and how much growth they can continue going forward into the future. We've also seen some days where the price drops 30 or 40 bucks in one day. And so I think if you're considering this stock, obviously you need to be prepared for really kind of turbulent stock prices, and you need to have the stomach for that as well. I wanted to look at a couple more numbers. For the 6 months ending July 31st, so this is 6 months, 2 quarters, revenues increased from 267 million to 991 million. There are like no companies that grow this fast. North America makes up a huge chunk of this, going from 117 million to 699 million. Similarly, we're seeing a price to sales ratio of about 81, which is shocking. But even more shocking is that we're seeing a price to cash flow of 434. So that's saying the amount you're paying for the stock gets you this much cash flow. And that number is like really, really, really high right now. Yeah, they're making a lot of cash flow, but you're paying a lot of money for this stock as a result of those expectations. We are seeing really good net profit margins at 17%, which is super good for a company this young, I think. And there's also no debt really to worry about. They have about $1.5 billion in liquidity at the end of the second quarter. And aside from some lease obligations, I think it was 60 million or so, basically no debt. So it's a really, really healthy company with really bright prospects for the future. So for me, Trey Dog, what are you gonna do? Are you gonna buy Zoom? Are you gonna throw your entire net worth at Zoom because it's kicking so much bum? What do you think? I think, personally, for me, in my situation now, it's like really volatile, and I feel like I've, in a sense, missed out on a lot of the upside, a lot of the gain. I'm always hesitant to get into a stock this late in the game after, you know, that huge jump. Yeah, it could go up to 5 or 6 or 7 or 800. We saw what Tesla's been doing in the last few months. I think it still could keep going. And you know, maybe having a couple of stocks in my portfolio isn't bad. And I think they will keep growing. They're still gonna keep kicking butt, and they're still gonna keep moving forward. And I'm really interested to see as they reach out into telecommunications and stuff like that as well. Personally, this is one of the things that I'm like not really sure about. I'm still kind of hesitant when it comes to all the security stuff. I don't think people are gonna go in and like hack my information or stuff like that. But when it comes down to it, it is a company in China. And when the rubber meets the road, the Chinese government has complete control over them if anything ever comes up. I think Zoom has come out and said we've never shared any information with the government. That doesn't necessarily mean they're being honest, and that doesn't necessarily mean that the government won't change that in the future, even against their own will. I don't personally know people who work at Zoom like I do with a lot of the other companies that I talk about, but I think we always kind of need to have that concern on the back of our minds. That's one of the reasons why I haven't been a big user of Zoom. And after that wedding that I logged into, I erased the app from my phone. You know, who really knows what's going on with security stuff? And so on that side of it, I kind of maybe even have a bit of a moral resistance to buying the stock. It's really tricky for me when you start digging into like Chinese companies in specific. As a man who's grown up in Los Angeles, I should be clear with you that like 80% of my friends are Chinese or Taiwanese. So don't assume that I'm like being racist or something like that. Anyways, as for the valuation, I think it's really kind of like a little bit too hot for me. You know, I think it might be one of those things actually where if I'm looking for a gamble, I might buy an option or something like that. But yeah, as for me, as far as valuation goes, I don't really feel super comfortable running into it right now. It might be one of those things where, you know, I grab a couple options and just kind of YOLO it. But I think if you're a smaller investor and this is gonna end up becoming like some huge part of your portfolio because it's 400 bucks, I would be hesitant to recommend that because of the waves. If you've been holding the stock, I think you should keep holding it. I think you're probably doing very well and very happy with your decision. I really wish I looked into this stock, you know, 3 or 6 months ago, before I started, you know, doing stock analyses all the time. But I'm really interested to hear your thoughts about the future of the stock, about the valuation of the stock. Are you gonna be buying it? Have you already bought in it? Are you looking to add to your position? What do you think about the stock? I'm interested. Let me know your thoughts. Looking forward to talking with you guys in the comments section. And thank you very much for taking the time to watch our YouTube channel here. I love you guys and have a great day.